So for all the people that were talking about the end of the bull market, there's only been one day that we've had a higher price. Yet despite that, there are plenty of silver stocks that are still in bear market territory. But people need to wake up and smell the tulips here and realize that this trade is over, right? All the big money has been made. Now the key is to get out. That's what they're trying to do. That's what all this stuff was about. That's why they needed Trump in office. They needed the U.S. government to pump this thing up so they could dump. Get out. It's above 100,000. You'll thank me later.
In today's news recap, gold price falls 3% amid market sell-off. Gold prices tumbled over 3% on Friday amid a broader market sell-off sparked by fresh remarks from U.S. Federal Reserve officials that dimmed hopes of another rate cut. The yellow metal fell to as low as $4,034.54 per ounce during the early morning trading, erasing most of its gains from the last few sessions after it looked like the metal was tracking towards its best weekly performance in a month. Driving this decline were hawkish signals given recently by Fed officials that diminished the likelihood of a December rate cut. Additional monetary easing, which the market had previously anticipated, would have bolstered the appeal of gold. Market expectations for a 25 basis point rate cut next month fell to 53% from 64% earlier this week. CME Group's FedWatch tool showed it's this idea that we're going to see a lesser likelihood of a Fed rate cut in December that is taking some of the wind out of the sails of the gold and silver market. David Meager, director of metals trading at High Ridge Futures, told Reuters, when margin calls and liquidations happen, traders close everything to free up margin. This is what partially explains why even gold is down in this risk-off environment, said F., a market analyst at City Index and Forex.com, in a note. Even with this pullback, gold is still up nearly 60% this year, with central banks stepping up their purchases for asset diversification and investors piling into the metal as a hedge against growing fiscal unease in some of the world's biggest economies. Some of the froth has been blown off in a much-needed correction, Rona O'Connell, an analyst at StoneX, said in a note. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
But the fact that so many silver stocks are basically in bear markets when silver is trading at the second highest price that it's ever traded, it just shows you how quickly the sentiment soured just on a sell-off. And remember, silver got down to about $46 and change at the low, and now we're back up to 53 plus. And as I said, 50 is no longer the resistance. I mentioned that on the podcast I did on Friday when I just got back from the New Orleans conference, and I mentioned that there wasn't a lot of exuberism there. But it was tempered, and there was a lot of people that were worried about a bigger correction, a lot of people talking about taking profits. And what I was saying was the mistake that people are going to make in this bull market is taking profits too soon. Now, sure, traders, you could have sold and bought back these gold stocks. They did have a big enough pullback. In fact, you could still buy back if you got out right at the top. But most people aren't going to get back in. They're going to get out and, they'll be waiting for a bigger correction. The corrections are generally very swift. Maybe they're shallow and they're over with. A lot of people who probably bailed out aren't back in yet. And the next thing they know, we're going to be at record highs. Now, certainly in the metals themselves. I mean, silver can easily hit a new record high this week. Gold, is a little bit further from its high. Gold still has a couple of $100 to go because gold, I think, almost hit 5,400. So we need a bigger rally in gold than we do in silver. But they're both likely to make new highs. And I'm going to get into some of the fundamentals, because there were a lot of very bullish news items that we were getting in the market. I mean, of course, one of them, I think, is the end of the government shutdown. I mean, I mentioned that on the last podcast, that it looked like it was getting likely that the shutdown would end. And by Monday morning, it was pretty much a done deal. And that was really the catalyst for the $100 rise in the price of gold. $100 plus was the end of the government shutdown. Now, a lot of people might have thought intuitively, well, wouldn't that be bad for gold? I mean, wasn't gold going up because the government shutdown was bad for the economy? It was creating uncertainty, and that was benefiting gold. And so that once that uncertainty was behind us, once the government reopened and that was good for the economy, that would hurt gold. That's what a lot of people might have thought. But the opposite happened, because the government reopening isn't bad for gold. It's the government staying open that's bad for gold. Because when the government is open, it's doing bad stuff. It's spending a lot of money. It's borrowing a lot of money. It's printing a lot of money. The problem with the shutdown was we didn't shut down enough government. Maybe if we shut down a lot more government, that might have been bad for gold. But the fact of the matter is, it's business as usual in Washington, D.C., and that's good for gold, because it means the reckless spending is going to continue, the money printing is going to continue, and so inflation is going to get worse, the dollar is ultimately going to crack, and all of this is bullish for gold and bullish for silver. But before I get to some of the other things that happen, I also want to juxtapose what's happening in gold and silver right now to what's happening in crypto and Bitcoin and the whole crypto industry. And this is also happening in general, because, the Dow Jones hit another new record high today. We're getting closer, right, to a 50,000 Dow, which doesn't really mean much in the context of $4,000 gold, right? The media won't talk to you about that. But we're at, 48,250 or so in the Dow. So the Dow hit a new record high today. But the NASDAQ was flat to slightly lower on the day. So you're getting more of a rotation continuing out of growth, particularly technology stocks, which have had, they had problems last week and they're having more problems again this week. So you're seeing some money coming out of the tech sector. But before people started moving money out of tech, they were moving money out of crypto.
In today's news recap, gold drops as Fed rate cut expectations fade. What happened in gold today? Early Asian session witnessed bullish continuation in gold, retesting $4,211. However, price failed to gain acceptance above the $4,211 high, and subsequent price action followed a gradual lower high, lower low initially, only to unleash heavy and strong one-sided sell-off that dragged the metal all the way to $4,038 as selling intensified after $4,120 to $4,110 area failed to hold as support. What is expected ahead? The next support sits at 61.8% Fibonacci retracement zone, aligned with $4,023. The rebound needs a clear break above immediate hurdle, $4,100, followed by strong break above next resistance. $4,110 to $4,120 consolidation zone. Short-term challenge is $4,185, followed by $4,215. If price retests $4,023 on the downside, this zone calls for monitoring for any reversal signs and buyer's intervention as failing to hold, as support will expose next potential zone, 78.6% Fibonacci retracement at $3,963, which is considered as discounted zone, often a strong reversal area and point of interest with the best risk versus reward. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Is number one in crypto because the crypto bubble is deflating. There's a lot more air that's going to come out of this thing. But the country that leads in crypto is the country that's got the most to lose when the bubble pops. So because we're the leader in crypto, we're going to be the leader in economic damage done from the bursting of this bubble. Right? There's going to be significant implications for the U.S. economy, which is also good for gold because all of the losses and the malinvestments that are going to be exposed are going to help gold. And of course, a lot of people that work in the crypto industry are going to be out of work. So unemployment's going to go up. A lot of things are going to happen negative. I don't know if it's as big or maybe it is bigger than the bursting of the dot-com bubble. But, if the AI bubble bursts and the crypto bubble, I mean, that's going to dwarf the dot-com bubble. But I do think that the crypto bubble is bigger than the dot-com bubble all by itself. And we did get into a recession when the dot-com bubble popped, although we also had the September 11th, terrorist attacks. But I think we're already in recession. So I think that, all the job losses and investment losses, and remember, people are going to react to this reverse wealth effect because I think if Bitcoin cracks this 100,000. I know it got below it last week, got to 99, but they were able to circle the wagons and prop it up. But I think that if we crack and we really make a big drop in Bitcoin, I mean, even at like 50,000, which is still a really high price, for nothing. But, I think the losses are going to be substantial. And of course, if Bitcoin goes to 50,000, a lot of these stocks that are down 70% are going to be down 95%. And of course, some of them are going to be down 100% because they're going to go bankrupt. And I think a lot of these Bitcoin treasury companies that bought up a lot of Bitcoin are going to be selling the Bitcoin they bought at big losses. But when all these Bitcoin buyers turn into Bitcoin sellers, right, look out the way. And of course, the biggest seller of them all will be MicroStrategies. Now, I don't know how long Saylor can probably hold out more than most, but eventually he's going to be selling Bitcoin. But this is a key thing to look at, what's going on. And I know for those of you who watch my podcast and, I've been saying this, I've been saying this. Yeah, I know. Bitcoin's gone up a lot. But over the past 4 years, it hasn't. So sure, yes, I dismissed this thing 10 years ago. And, I didn't get in on it. And yes, I missed out on the opportunity to make a lot of money speculating on a Bitcoin bubble forming. But over the last 4 years, since Bitcoin hit 69,000 in 2021, people are better off in the investments that I have been recommending as opposed to Bitcoin. And meanwhile, Bitcoin is a lot farther below its highs than anything I've recommended. I mean, look at where gold and silver are. They're right near their highs. Bitcoin is far from its high. So there are a lot of people that now have big losses who bought in, and especially if they bought into these crypto-related stocks, because they've done a lot worse than Bitcoin. Whereas, gold stocks have done great over the last couple of years. So people who bought gold stocks are way ahead of people who bought these crypto stocks over the last 4 years, right? I don't know what, there weren't that many crypto stocks to buy, 10 years ago. There were just the tokens.
What do you think of today's show? Do you believe that the current gold and silver sell-off is some sort of coordinated attack against the metals, or on the contrary, is just big players taking profits after an abnormal rally? Post in the comments section your plan for gold and silver and share with the stackers if you are taking any profits after the mega rally we experienced this year so far. Now, peep this video right here because it's a perfect fit for you, and I'll see you on the other side.